The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And as we come back from a wonderful week off the airwaves here at TFNN.com, we're having a beautiful October 22nd down here. Still air conditioning's running full blast down here at the headquarters of Technical Trading and Investing, TFNN.com, as we have an absolutely beautiful, maybe even a little steamy October. I know a lot of people have already started to get a few whiffs of the cold weather up north, but it's still nice and balmy down here, and we continue to see the market try for lower prices. I wanted to get into a few things out there. Probably the biggest thing in the news today. Oh, I forgot to say what day it is. Today is International Cap Locks Day. That is for people that have been dropped by their mothers on their head and continue to use the caps lock keys all the time. People always have that little caps lock keys on. They don't know that they're yelling and screaming at people. It is considered a bad form on the internet to have your caps lock key down all the time. And we know that maybe you've had, a bad rap to the head, or maybe dropped by your mother, but that caps lock key can come off and on. So that was, just as everybody knows, you can turn that off. Anyway, it's become so widely successful over the last 10 years that they're now actually celebrating National Caps Lock or International Caps Lock Day twice a year. But today we celebrate those people that disbelieve that or don't understand that they're yelling when they run with caps all the time. So anyway, it's Caps Lock Day. So what do we have going on for this week? Well, I kind of lost all my notes in translation here today, or in transport for some reason. But do have kind of an interesting take on what's going on. Probably the most interesting thing this week is earnings on a broader scale in the launch of Windows 8, at least in technology. We continue to see weakness in the market. I wanted to see if we can log in here and find out why. I have this wonderful SkyDrive set up to sync my at least my presentations and everything from the office to here. But come back and find out someone had deleted it off this machine. So I will have to raise holy hell later. Anyway, we're watching some stocks. And, we've got a fairly decent pullback underway. I had warned 2 weeks ago on, I think, Tom O'Brien's show about actually just how weak the supply chain in Apple was getting. Of course, tomorrow at the Moscone Center, probably around noontime, they're going to roll out Mini-Me, the smaller iPad. I don't know exactly when they're going to start shipping, but normally they don't show anything without being able to ship it within a couple of weeks. I'm figuring first couple of weeks of November. In related news, Samsung's come out and said that they'll be basically cutting Apple off for their displays. And continue to see Apple have some interesting movements out here. About 622 has been the support level for Apple. It's trading out at 624. You could almost consider this a false breakdown, the equivalent of the false breakout it had on the top, if it can continue to hold 624. But 622. Right around in there was the support level. It blew through down to 610. I continue, we're getting a little bit better numbers about the bill of materials on the mini iPad. It looks like it's going to be one of those things that costs them around $200. They're going to sell the base level product for about $300. And the question is what that's doing to their margins. Even with the iPad that they had before, they had to sell 2 iPads to make up the equivalent that they made on one phone. Now we're looking at basically probably 4, maybe 3.5 or 4 mini iPads to make up with one phone. So when we look at it, a lot of noise and screaming and yelling, but that brings the margins down for the overall company and makes them more of a commodity kind of maker. And I think we've seen the first little move off there and what is going to happen in that marketplace. You know, we're off about 8 points on the S&P. I continue to think that we're probably getting ready to make some multitude of ABC downs that will take us somewhere in the 1350 level for the S&P. But that may take all the way till Christmas. One of the reasons I suspect we may have a slow but steady selling season all the way into the beginning of the new year is the belief that we will have something like a 57-43 Senate. That will be enough to lock up pretty much anything, and we're going to have the fiscal cliff. Taxes are going to raise, and the thought is if the capital gains rates are going to go up significantly, wouldn't it be smarter to go ahead and sell today than wait and pay, you know, whatever it's going to be, 7-8% more come in the beginning of the year? We saw just a huge movement when the lowered tax rates on capital gains came out in 2000, and we saw the huge, basically a big balloon that pretty much came out of it was 2001, a balloon that came up because people were holding their stocks knowing that if they waited till the first day of the next year, they would get the lower rates. So we had kind of a mild bubble caused exactly because of tax policy. This would be it on the opposite side. If I've got a stock I'm sitting on with really decent profits, why not take it now and make sure that we don't have those higher tax rates? And I suspect what we're seeing is that right now. A lot of people are trying to get out before the end of the year and see exactly what's happening in the marketplace. So it will be very interesting to see how that all plays out. We were looking at volume 1.8, 1.9 million shares or billion shares on the consolidated New York Stock Exchange tape right now. That means we've got pretty much what we've been looking for, which is some a little lower lows. But we could go back to 1350 on the S&P and go up to 1500 and just be part of a bigger ABC up. So why I'm bearish for a while until we see some significant downside pressure, I think that we could go back to 1350, alleviate the pressure before the end of the year, and then maybe see a first-year rally come back. We might see additional selling. But at this point, I'm looking for 1350 on the S&P to be a long-term support level. We saw the market last week pretty much crack the midterm support levels. I've been short in the newsletter for at least a few weeks on the Tech Insider, and also bought a lot of puts in the daily newsletter. We've got a few of them. Actually had some short positions on equities that covered one of them on Friday. It wasn't a big winner, but we went from 33 to $30. So go ahead and take our 10% profit on that. Sitting on a much bigger move right now on one of our option position that's it's up over 100% right now. The question is, we've got earnings on it on Thursday, and do we get some kind of bounce out of this thing? Will that bounce lead into earnings? I think a lot of people are pretty much fairly shy about driving stocks up before earnings. I think a lot of the bubbles we've seen on the stocks like Google and Apple when the air's been let off. Of course, we've got Apple and Yahoo earnings this week, so we'll be watching those fairly closely. But I suspect that we already know what's going to be, for the most part, in Apple's earnings, which is that they're going to show margins starting to decrease, mostly because other than the iPhones, everything that they make and every new product they make actually has lower margins, not higher margins. If they could come out with another product where they can make the kind of margins that they make on the iPhone, it would be rather spectacular. The computer business is such a small part of their business anymore, it doesn't really even matter. But going to come after Apple, I guess Apple with their mini iPad tomorrow. And I think a lot of people will be buying it. They'll be pushing it into schools. We're seeing the same thing from Amazon, pushing their products into schools. But I suspect that as we get Microsoft on, earnings are on Thursday. I think earnings are on Thursday. Also, the rollout of Windows 8. Oh, maybe Microsoft was last week, excuse me. What I'm thinking of is the rollout of Windows 8 on Thursday night and actually being able to pick up the product on Friday. Over the weekend, we did find out that they, as far as their tablets, they are pretty much sold out for the first batch, which is pretty good for them. The question is just how big was their first batch, and no one really knows. They've had some production problems a la Apple, probably not near as bad. Right now, what we do know from Microsoft is that they say that they're going to be building about 5 million pads to sell through the first of the year. Not a bad business for them, especially since they haven't been doing a lot in that consumer range. I'm suspecting that their big money is going to be moving people up out of XP into Windows 8 over the next, probably 18 months as people have their computers expire. There's still a lot of things that you can't do with a tablet. And even Bill Gates was out over the weekend giving some interviews about what he thought of the Surface product. And it's basically what I thought. It's basically trying to give the best worlds of a keyboard mouse interface along with a touch screen and some other stuff. He kind of hinted in these that the Kinetic will be part of a standard tablet, laptop, computer interface over the next few years. And they're working very hard on adding those kinds of interfaces or new user interfaces or natural user interfaces that they've been talking about for a while. We've got a couple of IPOs coming out this week. I'll try to pop them up maybe here during the break. A couple energy ones. There was one that's coming out of Dean's Foods, and I'm trying to remember the name of it. It's like White Foods or something like that. It's going to be the biggest one. It would give a market cap for about $3 or $4 billion. Maybe I can look those up during the break and give a check. But anyway, we'll be back in a minute. You can always give me a call at 877-927-6648. That's 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, wanted to talk about the IPOs, mostly energy IPOs coming out here over the last couple of days. Lee Gas Partners is a wholesale distributor of motor fuels in the U.S. They're going to raise $120 million, 19 to 21 bucks. A lot of these IPOs just doing it, I guess, because they can. About 50% of these are not making it out the door by the end of the week. We've got Marathon Petroleum Corporation. It's going to trade under the symbol of MPLX. It's planning to raise $300 million, at least starting to interest people in a little bit of money, 19 to 21 bucks. They're, of course, another energy. White Wave Foods is the one I was thinking about earlier. It's going to trade under the symbol of WWAV. They're going to raise about $300 million. But the big thing is that it's going to give a market value of $2.6 billion to the rest of the shares. Finally, something decent, at least as far as market size. It's going to allow some of the bigger funds to actually invest in them. White Wave Foods, founded in 1977, booked $2.2 billion in sales over the last 12 months. The Texas Dallas-based company plans to list on the NYSE under WWAV. So not a whole lot happening out there, but that's the only one that seems to be kind of interesting to me. It was part of Dean's Foods or split off of Dean's Foods, so it's been around for a while. Probably going to have a much better view of that. Not many IPOs out here even worth playing just because of they're going to have a light volume and probably just go down from the time that they actually come out and go public. So it's going to be interesting to see what we have in that. But anyway, just checking back in here into the market, seeing a little market push back. Check in on the S&Ps real quick. Again, you can give me a call. I've been gone for the week, so if you want me to answer some questions, 877-927-6648. We're still off 7.5 points on the S&P. 1422 is going to be support, and I imagine we're probably going to close right around there and not give a good indication. This is options rollover today, so I don't put a great deal of weight behind a day, mostly the Monday, Tuesday after that. We saw options expire well below the published rate that the options would suggest, which means there's probably a continuing bearish bias, at least for a while out here, until we see the options expire, the equities expire higher than the options would indicate. But even the SPYs were indicating about 145. We were well underneath that. Probably mostly on the releasings from Google, and we continue to see some of those out there. I'm trying to think. The only thing that else I wanted to talk about, intraday, we saw Open Table take a little bounce. Let's see if I can get a current quote on Open Table here for us. OPEN was as high as 46.98. It's back down to 45.87, and basically a rumor was pushed out this morning that Yahoo was going to buy them. Somebody from Yahoo came out and said apparently someone who wanted to get out at a higher price probably said that because there's no basis in fact. So other than that, not a lot of rumors moving a lot of stocks. We did see a couple of them. Caterpillar, CAT today. Let's see if I can get a good look at that during this segment here. Caterpillar moved their earnings down and trying, not at a bad place if you're looking at least medium-term support. There's a nice little gap that's set up the support on high volume on, June 25th. You had almost 20 million shares, and it did close lower than it opened, but high volume day, we're right back into that candle now. The volume wasn't all that light today, and as we actually look at that, you need to make sure that that volume does come in later. The next move, where I'd be looking at Caterpillar on a possible bounce would be $78.25. That's July 12th low at 8.7 million shares. So we want to continue taking a look at those. We'll be back in a minute. Remember, you can always give me a call at 877-927-6648. That's 877-927-6648. I'll be glad to take your call. It's been a week since I talked to you guys. You got to let me know what's going on out there. I know you're alive. I can hear you breathing.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Monster Beverage also is tumbling out here today. MNST. If I can actually type correctly here. MNST. It's coming back through resistance levels, or support levels, excuse me. And not much volume in the gap that it's gone through today. Looks like it's trying to make a fairly decent move out here to the last, it's going right through where the big breakout move actually happened up to the highs. But next stop down here would probably be around $38.20 if it can make it through these two minor moves. But certainly most significant volume here for a while. And it's probably going to at least match the volume from August the 13th where we saw previous lows out here. And we'll be keeping an eye on that. Actually, what else do we have out here? Haven't brought up Google since I've been gone, so we'll take a look at that one. They came out intraday, continuing to be weak, but they've come to a little gap that was out here on September 5th, looks like. And that gap up happened on about 3 million shares, and we're going to have probably at least that in the previous 2 days, a little lighter volume out here today. Google has been probably the best performing stock of the strongest of Microsoft, Intel, Apple, Amazon, basically a lot of those. They came out intraday, basically had a lot of problems with Motorola. But what you see in Google is basically them coming out and finally stating that they make about 25% or 25 cents on a extended click-through for mobile and about 45 cents for extended click-through from the desktop. Just because you can show so many more ads on the desktop, you get the ability to collect a little bit more advertising. Also, it's hard to see as many things on a mobile platform, so a lot of times people don't go to second and third pages. They just look at the first couple of results back, and then that's it. But it certainly has taken the bloom off the rose. But I thought we had somewhat of a bubble going on here for a while, at least through the middle of August until now, and at least we've taken some of that pressure off as we come back and look at the market. But I suspect we're probably going to make some ABC downs until we find probably some level that the market can allow, and it's probably going to be at the end of the year as the fear of the fiscal cliff and tax raises continue moving on a little bit farther. Let's see if I can get back up here, and wanted to get to the NASDAQ movers and shakers out here if we can. So my portfolio, NASDAQ, and bring those up here in just a second. Okay, Monster Beverage is the worst performing stock out there in the NASDAQ 100. Amazon.com is also off about 3%. We are short that in the newsletter. Marvell Technology continues to be hammered. MRVL. A lot of discussion of whether or not these folks are going out of business. I don't think they are, but certainly in for a rough time. And watching sky high short interest. You could watch this just over the last couple of days, especially on Friday. Everybody continued to short this on the way down. Market tends to be a little bit or a great deal shorted, probably shorted, let me say, see if we have, I wanted to find one of these here. Let me find it. I think it's on my drive here. We had a few out here that are looking rather poorly either. One of the few ones that's kind of interesting for me is that if you were looking at some of these IPOs, Zipcar is one of them, ZIP, getting kind of close to a high volume low. A few of these stocks are showing up as with the possibility that they do have a bottom coming, at least in the short term. That's why I'm thinking maybe we see these kind of moves where we do see a small term low. Another one out there that we're watching today is Micron Technology, MU. Last big major low was on June 4th, $5.30, 30 million shares. Kind of be weak today, about 18, 19 million now. So maybe 25 million by the end of the day, something like that. Of course, had about 24 million on Friday, but we're coming back in for a test on that. Mohawk, which is the carpet maker owned by Buffett, it's kind of put in a little high, so I'm suspecting we might be seeing some more weakness in the home builders up here. This is the first sign, but certainly it tested the previous high of September 25th, $82.76 with 1.5 million shares. It tested that with it last week on basically 600,000 shares, or about 30%, maybe a little bit better. So you've got to look at some of these showing quite a bit of weakness. They haven't all rolled over yet, but you probably want to be looking at more of these that have that. Another one in the semiconductor industry that looks like it could be coming in for a landing, LSI Corporation. LSI is the symbol on it. I had one of the few actually if you were bullish, maybe even buyable patterns out here. That is, it took off with a heavy volume, a big sign of strength on 726, and that was on almost 40 million shares. It has come back down there, the first test on October 12th with 8.3 million shares, 8.3 million shares, and we're back in there today with about 14 million shares. It might take a little bit more out here, but we're seeing a lot of money probably being pushed back into Apple for earnings. It's up $17 today. Could give probably a good indication this thing closes below 622, that you got a false breakdown. But Apple is the kind of company that people will throw money into forever because of the big name. Why? This is probably not a bad time for a lot of the bigger stock players to maybe take their money. I think maybe they have been for a while, and may just be for tax reasons before the end of the year, as we discussed. Let me go back here, look just real quickly again. I've got a few stocks I need to be watching fairly closely. Okay, so we're pretty much there. I think we're probably going to make a small term low in here in the next couple of days and start that ABC back up. I'm looking at volume here. And we're about 2 billion shares. I'd like to have seen probably about 3 billion shares by 3 o'clock. So we've got about 18 minutes, going to come in fairly shy. Going to predict about 3.3 billion shares by the end of the day. Some other technology stocks that look fairly interesting. If you want to see another one, FLR Systems, forward-looking infrared radar is what it stands for. Get a little bit better. It's kind of done about a 50% retrace. Going to look back in here, but not a lot of volume. I'd want it to come back probably to the about $18 level that we saw on July 17th to actually buy it, but not so bad, especially fairly lighter volume. But what I really like is this big candle we had on 726 in it also, and that was up on huge volume of 3.3 million shares that we're doing, 500,000 shares today, and at the bottom of that candle means that we probably want to be looking somewhere back in here for a support level. Dish Systems. I've been waiting for these guys to make up with AMC, so you could watch, those folks could be watching The Living Dead, or The Walking Dead. The Walking Dead on Sunday nights, one of my favorite shows. Don't tell me what happened. I haven't had a chance to watch it yet. DISH, most of these satellite providers of the basically cable television fare probably don't have a long time to live. Internet is slowly creeping into their business, and they're getting squeezed on all sides from the consumer and from the content providers. Dish finally ended up being some kind of $700 million complex deal that they had to buckle under to get AMC out. But if you'd watched AMC at all, you've been probably noticing that they were touting that you couldn't see Mad Men or The Walking Dead or anything on AMC because you wouldn't get AMC on Dish. So really kind of beat up over that, but I think that we're probably getting to a point very close where we're going to see that the top, long-term top, probably all-time top, is going to be in these satellite content providers, and that's going to be it. There's a few of these that are probably just getting to the end of their run. Dish is one of them, but let's see if we take a little bit longer look at Dish out here. But we're seeing a little bit more weakness out here than we've seen before. March 22nd was the last major high, 8.8 million shares, $35.64. We are getting into that with about 5.3 million shares, had about 7 million shares, still light of that previous high, and bears watching. AEO, American Eagle Outfitters, are seeing a few of these. Also, these clothiers look like they're putting in some decent tops. One thing that I've thought is kind of a false breakout for a while has been the breaking of the May 2nd high on AEO. That $21.13 high with 25 million shares has not been broken. Tried to get up on September 19th, closed back below it. Tried to go back up, fill most of that gap, and now you get a close below $21.13 again today, which, 80, 90 cents would probably be a fairly decent long-term top in some of these out there. Anyway, I wanted to look at a few others while we had a chance. See if we can look at a few other stocks. So just quickly here. Netflix is actually up. NFLX. Take a quick look at that. Yeah, it's actually one of the bigger ones out here. Not a bad pattern, a little bearish engulfing of the Friday's candle on actually better volume. But this is another one that came down on monstrous volume. You might get one more chance up here around the $75 mark. If you were thinking about shorting Netflix, that may not be a bad place to hit. The biggest problem I have with Netflix and Coinstar, who has red boxes, is just the horrible movies that we've had out this summer. Only a handful of them are probably going to get watched. They certainly weren't watched in the theater. The worst summer for movies at the box office in the last 10 years. So as we look at that, you've got to think, how well does that transfer into actual sales for these providers on the internet, or even providers at your local grocery store. But I've had a hard time getting these, but certainly want to be looking that. I have a question. What was the worst movie? The worst movie all time? The worst movie this summer? This summer. I don't know. I didn't see any. The one I wanted to see, I did, which was a great movie that's a thinly veiled portrayal of the Scientologists, came out called The Master. It's very good. I hear that was it Angor? Anyway, it's a movie about the Tehran taking over of our embassies, getting very high ratings, but just all of them were so poor. I saw Battleship on DVD. Boy, the guy that they had starred in that was he couldn't act his way out of a paper bag. So it's pretty bad. Anyway, I wanted to look at a few other ones. KLA 10 core is up about 2.5%. I'll see if anything's in that KLAC. You know, a lot of these are just what we were expecting, which is we've got these things coming up off of decent volume over long-term support levels. In the case of KLA 10 core, you know, not all that bad, but you really needed to see the volume shrink on the test of the lows. It popped up on November 30th last year on about 3.7 million shares, setting this gap up. We've come back into it with 2.6 million shares, and that was on June 4th. We saw it come back on October 12th on 2.8 million shares. You would have liked to seen that shrink from the previous low. Suggests you're going to get one more test down around that $44 level. You'd like that thing to come in at about 1 million shares, and might see some decent movement there. Well, are we already out of time for today? Could it be that? Oh, no, we've got one more segment. I've gone for a week. I can't even remember what's going on. Anyway, we've got a question in the den. You can always give me a call at 877-927-6648, but we'll talk about that before the end of the show.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And there we go. Got a little volume in my headset back here again. But let's see, what was the question? Apple, do we see Apple rallying past the announcement into earnings? You know, could it get back up to 650 and start a move back down? I suspect that Apple is heading over time back down to about 570, and it may just be a process where everybody starts selling the market and Apple gets sold with it. But part of it, I think, is declining margins on their new products. They need a product that comes out and makes some huge margins. And most of these products that they're coming out with, like the mini iPad, are great. But unless they start making a lot of money in iTunes off these things, or they start making a lot of money in the app stores, are they really going to make any kind of decent money? And the answer is probably not. The onslaught of Android devices is huge. We get Microsoft going for the high end mostly this week, and basically the Windows 8 tablets are going to be much like movable laptops. Bill Gates in his discussions over the weekend basically said he wanted to have the best of all worlds, a desktop, a tablet, and a laptop. And he's trying to put all the interfaces in for it. But I suspect Microsoft is going after the more expensive of these marketplaces. Apple's coming in the mid-size. We're going to see Android down at the low side. In fact, Android is probably going to have the current version that's about $200 out for about $100 before Christmas. They're going to probably try to blow out as many of those as they can. And so, that Nexus 7, which is a wonderful piece of hardware, was probably the best thing shown since midsummer. They actually didn't make it. It was designed by ASUS, but a wonderful product. I did have chances to play over the last week with the Surface tablet for Microsoft, and I find it very elegant, and I want the non-RT version, their Pro model. It's probably going to be around $1,000. The current RT is going to be about $500. I guess back to the question in the den, which could Apple run? And the problem is that the answer is probably yes into earnings, maybe a little bit, I suspect, as people kind of try to shake off. One thing I don't think that signals that we've had a significant low in which I'd buy Apple is the VIX. We had a VIX out here that was, let's see, let me find it here real quick. I was on the wrong page here. So take a look at that here. We had a VIX. I would think, especially the moves we have, we should start seeing the VIX about 2021 before we see the next significant move. And right now, with a VIX in the mid-17s, I just don't see yet enough fear to signal that we've made some kind of bottom out here in the marketplace. I'd love to buy some of these stocks as soon as I see that I'm proven wrong, that we're going down to 1350. Or the end of the year come around and everybody that can sell has or will have sold. But I still see weakness in a lot of these stocks. Could you get a couple-day bounce out of them? And is Apple basically putting a floor in and saying that 622 that did get broken on Friday was a false breakdown? If you get a closeout here, 15 million shares probably tells you that you're at some level of support. I think this winter, Christmas is going to be the Christmas of the tablet. If you can buy tablets at $100, I think they're going to be huge, and I think that's going to hurt Apple, especially since on the higher end they're going to be taken out on business, and on the lower end at a commodity level. I think they had to come out with the iPad mini, but I think it's hurting their cause more than helping it, at least on Wall Street. We will be back tomorrow. You all have a great, safe, and wonderful evening. We got 3 more hours of programming here from TFNN.